Welcome back, profitable traders, to another stock market analysis video. In this one, we're going to be taking a broader look at the S&P 500. We're going to get a real gauge for the direction that the market actually wants to go in. We're not going to get too caught up in the daily or the weekly trend. And this is simply for the fact that the S&P 500 is really in a grinding higher zone right now. It's not really making any sudden movements in either direction, and because of that, it makes it super hard to swing trade. It makes it super hard to even make a prediction in which direction the market actually wants to go in, because it's not choosing a direction. um and before I kind of get deep into this analysis, I understand I'm a bit of a smaller creator here on X. I've only been posting consistently since last month, since May, beginning of May, where where I kind of broke through the scene with my big famous call out on being bullish for all of May. We were coming out of the April lows. We were still, kind of had a lot of tariff uncertainty, economic uncertainty. People were scared. And I was, one of the few voices here on the platform really telling people to buy the dip, to buy this dip, not only a little bit, but buy it hand over fist. I famously called Tesla, Nvidia, and JPM to the upside for all of May. I was telling you guys to buy it. All three of them hit my price targets except for JPM. We were just a little bit short. I think just 2% short on a over 12% move on JPM. And this was something that I was telling you guys about even before the premium spike. So, I mean, the gains on JPM were just insane last month if you listened. Even before then, I would sporadically post on X. Even during February, I kind of made a post on Tesla where, for in February, Tesla was, still sky high. Beginning of February was still sky high. We were coming, a little bit down from the highs of December 2024 and January of 2025, but we were still, well above the $400 level. And it was at that point where, people, it was at that point where it could have gone either way, where, Tesla could have really caught a second leg of the move and continued upwards into the 500s, or it could have really slowed down and kind of sold off. I was one of the fewer cooler heads in the market on this platform that told people, no, Tesla is a short at this level, short it below or short it below $300. That was when it was well above $400. I was telling people to sell the stock and to take a short position. Of course, if you listen to me, it worked out phenomenal for you. So that's the type of trader I am. Even on smaller time frames, I'm even good on that. Even earlier this month, I made a call out on Tesla to the downside. That head and shoulders pattern that we were getting. I was one of the first people to really notice that the trend was changing on Tesla, and that it's actually going to the downside. Even I was calling Tesla to the downside even before the pattern fully formed, before we had the Trump Elon debacle. I was telling people to short it days before that because I could tell the trend was changing. So I'm not new to the stock stuff. I'm not a novice trader. I'm not just out here talking out of both sides of my mouth hoping to catch, some clout. No, I actually deliver true stock market analysis. I make real call outs that actually make people real money. Um, and with that, I kind of have a unique view, a unique approach to the stock market. I don't I analyze the charts for what the charts give me. So I take what the charts will give me. And then I also look at like the macro side. I look at the economic side. I look at, is the, economic landscape, more bullish or bearish? I look at, both the bull situation and the bear situation, and I weigh out the probabilities of both of them. I really try to have an unbiased view on the market, a completely, unemotional and technical um, perspective that has been very um profitable for me personally, and it's given me a decent track record here on X, even though I'm a newer creator. So that kind of raises the question. So before I kind of get deep into the this video and kind of get deep into the nitty gritty of this video, I kind of want to talk about both the bulls and the bear situation on the macroeconomic side. Is it, are bulls kind of being favored on the economic side, or are bears being favored on the economic side? So on the bull situation, right? Bulls want rate cuts, they want low inflation, they want, amazing projected GDP growth. They want growth and expansion. And this is completely unbiased. No, the first point is, are we going to get rate cuts? And the answer is no. The Fed is not has been very clear that they are data driven. They are only going to cut rates if there are cracks in the labor market. They're only here to defend the labor market. They're not here to defend the stock market. So the prospect of rate cuts in the near future is low unless there's a sudden spike in unemployment. That's the only reason we would get rate cuts. And the next point is low inflation on the horizon here? And the answer again is a blatant no for the bulls here. There's low inflation is not on the horizon here. We're promised tariffs. We're promised a very big spending bill. We're promised these things in the and the next point here is, are we going to get low inflation? Is inflation trending lower? And the answer again is no. In fact, inflation has been trending higher for the past several months. It's been unchanged to higher for the past several months. The Fed, doesn't have a good grip on inflation. The Fed is trying their best, but inflation is still ticking higher month over month. That's just the reality. And then the third thing here is, do bulls have the prospect of economic growth on their side? Is the economy in the next 12 months, kind of destined to grow and succeed a lot? And the answer to that again is no. We're promised tariffs. We're promised, these things that are not going to fester and cause amazing economic growth. Tariffs have always been bearish. They've never caused economic growth in the short term. They, cause a bit of higher inflation. They cause, of course, higher prices. They slow down consumer spending and consumer confidence. So it's like when that is the outlook, it's very hard for me to say yes, buy 600 SPY right now in the month of June. It's going to continue going up 12 months from now. That's an easy bet to say yes. I'm not in that boat. I'm in the opposite boat. I'm in the boat of, slow down. Things are coming up in the near term that we should be very aware of. We should be cognizant of, and we should be trying to position ourselves accordingly for. And the next thing I like to do is I like to look at what smart money. I like to look at what the street is doing. I like to look at what the most intelligent investors are doing, what are hedge funds doing, and whatnot. And when I look around, it's been a kind of a known statistics that the hedge funds for the year of 2025 have been net short the market. Hedge funds are net short the market. They are not buying, the dip. They're not in any type of risk on scenario here. They are shorting the market. That's just not bullish at all. If you look at any type of legendary investor, we have Michael Berry that, famously a few months ago, I think last month, bought like a bunch of puts on Nvidia. He's been, known to sell US stocks and buy, Chinese stocks. That's what he's doing. Warren Buffett is holding on to record amounts of cash. We have alternative assets like gold and Bitcoin, at all-time highs, breaking records, and whatnot. So it's like, why are legendary investors selling this out of the stock market? Why are alternative assets like gold and Bitcoin that are, notorious hedges against economic uncertainty at all-time highs? Why could that possibly be happening? And it's because there's so much uncertainty on the horizon. People are almost pricing in a bit of a recession. And the way the market works is, if people believe that there's going to be a recession, that's when a recession actually happens. It's not because it's in the data. It's not because that's the actual thing that's going on. It's simply just a feedback loop that we put ourselves in. Oh, prices should be going higher because of inflation. So what do we see? Prices go higher, not because of inflation, but because companies are raising prices, because consumers have already mentally told themselves that inflation is here. That's what we saw in 2021. We're still seeing it in 2022. We saw it in 2021. We saw it in 2022. And I would not be surprised if we trick ourselves into the same thing with a recession in 2025. I wouldn't be surprised if we tricked ourselves into the same thing with a downturn in the S&P 500 once July 9th comes, because you know just market group think is, oh, tariffs bad, that means sell, so that's what's going to happen. Even if the way Trump does it, even if Trump sets it up in such a way that it's not going to cause economic slowdown, just because the word tariff is in it, that's the buzzword, that's what the market's going to react to. That's something that I think really should be considered here. You know, every month on X for the past couple months, you know, May I did this. I, you know, in the beginning of May, I made a pretty large thread on where I see the market going for that month. And that's when I kind of famously said that yes, the market's going up in May. That's the first time I did that, and I was correct. And now I'm doing it again for June. I did that in June, and I said that, you know, we're kind of I'm kind of getting distribution vibes from the market. I kind of believe that the market is in a bit of a distribution phase for June, and I and I kind of stand by that. And it's honestly been playing out for the first half of June. Like I said, the market hasn't moved. We've only had um 2 days where the market gained over 1%. Everything else on average, the market for the month of June has been at about 0.8%. So it's like we're getting these super small, kind of grinding higher types of moves, kind of solidifying the distribution thesis. I feel like in May we were having, you know, amazing months. In April, even in the downtrending month of April, we had amazing days and whatnot. We were still volatile and moving. We're not getting any of that in June. We're not getting any type of, you know, trading price action that it's easy for me to sit here and make a call out like I did in May, like I did in April, like I did in February about US stocks. I'm not able to because we're not getting any type of setup, any type of volatility that is tradable. You know, things are moving in the sideways direction. Even though yes, I know we're looking at the month the June monthly chart and it shows we're up, you know, 2.15%, and you're sitting here thinking to yourself, Mr. Profitable, how could you say we're in a distribution phase when I see we're positive? But it's like, look at the daily time frame. Matter of fact, we'll look at the daily time frame right now, and I'll show you what I mean. So please draw your attention to the top of the screen in this area over here. You can kind of see the percent gain for the day. So right now, you know, I'm recording this during the actual session. So right now we're currently, you know, up 0.85%. Last Friday we were down, you know, 1.12%. But other than that, if you just kind of look, and as I kind of scroll through here, you can see we're seeing what 1%, 0. Day before was 0.9%, 0.48%, you know, 0.03%, um, you know, 0.5%, like half a percent, another half a percent, you know, down. Oh, this was now in May, but like you guys can see for the whole month of June, as I kind of scroll through here, like market's not making any big decisions, you know. Markets, you know, most of the stuff is, you know, less than 1% move in either direction. It's not, this is nothing. And the only reason we had, I think, this minus 1.1% move, this was because of the tensions in the Middle East. You know, like I'm sitting here, I'm like, the market is really kind of lackluster here. Uh, Next thing I kind of want to talk about, you know, is kind of the price action that we're getting. This price action that we're getting for this month of June is the next thing I kind of want to dive into here is the price action that we're getting for this month of June. And it just so happens that the price action that we're getting in the month of June, this kind of grinding higher type of thing, is the exact same price action that we were getting in, you know, previously from December to February. You know, December 2024 to February 2025 that we were getting before the, you know, massive decline we had in March and April due to, you know, tariffs or whatever else uh, drove markets lower during that time. Uh, and I bet you guys want me to prove it. I'll just go back to the daily chart. You know, we were just looking at the daily chart. You know, everything was less than a percent. As we kind of get back, you know, this is February. You know, what are we getting here? You know, look at those percents. Everything's kind of staying less than 1%, less than 1%. Even as we go to, you know, a different time, this is January, less than 1%. You know, we're getting a few days over 1%, but everything is super small. This is now December. You know, we're getting the same grinding type of price action that that we were getting back then. That's right before the big decline that we had. So that's kind of putting me on pause a little bit because it's like I'm sitting here and I'm like, wait, we've seen this before. This is not the price action that we got before, a massive all-time high in the S&P. No, that's the same price action we were getting right before the massive decline in the S&P, right? Like slow down a minute here with the big big bold S&P to $620. It's like, hold on, we're not seeing that just yet. We haven't broken any previous all-time highs. We're not gaining momentum in the market like in May. For somebody to say, yeah, we're gonna hit all-time highs, yeah, that makes more sense in May than it does right now, even though we're closer, simply just because of the price action and the momentum is dead in the markets. It's not there. So to dive a little bit deeper into the distribution thesis for June, talk a little bit more, beyond just the price action, more about the economic outlook, not just, are we going to get growth or are we not, but what is actually going to happen, after July 9th, after Trump announces the tariffs. How is the economy going to start shaping up and looking after that? Is the Fed going to come and save us, right? And and I think there's a pretty interesting answer to that, and I kind of need to walk you guys through it. Um, so part of it is kind of like kind of need to walk you guys through it. So the first thing is coming is understanding how the Fed actually makes decision. Is the Fed actually going to cut rates once tariffs are announced and whatnot? So like I said before, the Fed only wants to cut rates if there are cracks, if unemployment spikes. So the Fed only wants to cut rates to defend the labor market. If unemployment spikes, that's the only reason they said they would cut rates. And the interesting thing about that is unemployment is announced on the first Friday of every month. So the first week of every month, unemployment data is released. Um, and and it's great. We all know. So to dive a little bit deeper into the distribution thesis for June, beyond just the price action, beyond, kind of who has the edge, bulls or bears, actually talk about more what the actual economic outlook for the economy is over the next 12 months, over the next, what the fuck she so to kind of dive a So to dive a little bit deeper into the distribution thesis for June, not just the, you know, who has the edge, bulls and bears, and the answer is, definitely not bulls, and bears also kind of haven't proven their point as well. So, the white elephant in the room now is, why can't I not get these words out? So to dive a little bit deeper into the distribution thesis for June, beyond just the price action that we're getting, which of course matters a lot, but it does not tell the whole tale. Of course, the other side of it is the economic outlook, is how the economy will start performing over the next 12 months, right? And the white elephant in the room right now is tariffs, right? How is the market going to react to tariffs? What effect will the economy, what effects will tariffs have on the economy? Will the Fed come in and save us? That type of thing. And the answer to that is a little bit deeper than a yes or no answer. It actually has a lot to do with the way that the Fed comes to make its decisions. I previously said the Fed told us that they're only going to cut rates if unemployment spikes. And the way that that's going to work out with over the next 3 months is actually quite interesting. So to kind of walk you guys through this, the unemployment data is released on the first Friday of every month. And Liberation Day tariffs are going to come on July 9th, which is actually in the second week of the month. So for the month of July, when unemployment data is released on the first Friday and then tariffs come the next week, the Fed actually would not have the unemployment data. We actually would not know the effects tariffs have on the employment market for the July meeting for the Federal Reserve. So on July 30th, when the Fed meets, they will not know the effects of tariffs on the labor market. So for the month of July, the Fed most likely will not cut rates. simply due to the fact that there won't be any cracks in the labor market at that point. The data will not reflect any cracks in the labor market because they're simply because of the So to dive a little bit deeper into the distribution thesis for June, kind of talk more about why I don't believe the market's going to make any sudden movements, where I see the S&P going, over the next few months, especially with tariffs and everything else coming up. I think it's very important that we kind of have a discussion about this and kind of dive like kind of deep into this and kind of talk about what's actually going to go on here. So of course the white, nah, so to dive a little bit deeper into the distribution thesis for June, beyond just the price action, which of course matters a lot, but the other side of the coin there is the economic outlook and how the economy is actually going to be performing, right? Price action and economy are the two main driving factors for the stock market. Um, so when we talk about the economy and how we see it faring, over the next, 3, 6, 9, 12 months is actually quite an interesting answer, especially in the next, 3, 6 to 6 month range, of course, because of tariffs. The big question is how is the market going to react to tariffs? Uh, will tariffs cause, a stock market crash or whatever have you there? And I think the answer to that is it's not like a simple yes or no question. Of course, we're going to see after July 9th, but I think that the way it's going to play out is no, I don't like this. So to dive a little bit deeper into the distribution thesis for June, why? So to dive a little bit deeper into the distribution thesis for June, beyond just the price action, which of course matters a lot, but the other side of that coin now is the economy and how is the economy actually going to look over the next, 3 months, 6 months, whatever. And the white elephant in the room here, of course, is tariffs. How will the market react to the tariffs that are going to be released on the whole world? And the answer to that is not like, a very, it's not a one sentence answer. It's not a very simple question. It's actually pretty complex. And I am not an economist, I'd like to say, but I have read a little bit about how the economy works. I kind of like have a little bit of understanding of it. Um, no, I don't like that at all. So to dive a little bit deeper into the distribution thesis for June, beyond just the price action that we're getting, but more about the economic outlook and how tariffs will affect the economy or the stock market when they are eventually released on July 9th, less than 1 month away, right? So, um, you know, so when tariffs come into the to talk, main thing people say is, okay, is the Fed going to cut rates to help, soften the blow of tariffs? And and the answer to that is actually really interesting. And I feel like I should spend a couple minutes just talking about what the Fed is going to do with tariffs and kind of how that whole thing will play out. So tariffs, as we know, are going to be released on July 9th. And the Fed has been very vocal about being data driven and they're only going to cut rates to defend the labor market. So we can only expect a rate cut if unemployment spikes, maybe due to tariffs or whatever happens at that same time to cause unemployment to spike, right? Um, no. So to dive a little bit deeper into the distribution thesis for June, beyond just the price action, beyond which of course, price action is very important. It means so to dive a little bit deeper into the distribution thesis for June, beyond just the price action that we're getting and with the things that we're just seeing on the charts, the next thing, the flip side to um, uh, so to dive a little bit deeper into the distribution thesis for June, beyond just the price action that we're getting, which of course, price action is very important in the markets, but the other thing that's very important as well is, interest rates and the economic outlook. Things of course get very spicy over the next, 1 to 2 months because of tariffs and the effects that that will have on the stock market. And the immediate knee jerk reaction to tariffs is Fed interest cut rate, right? Tariffs come, the Fed cuts rates, and the market should fare well. and boom, all green, all good. That's kind of, I feel like the kind of consensus on Twitter, but I feel like nobody's really talked about the actual logistics of that. So July 9th is the day tariffs are announced, right? That's when Trump is going to, re-tariff the whole world, whatever. Um, and the Fed has told us that they're only going to cut rates if unemployment spikes, right? So I like to talk about how unemployment is announced on the first Friday of every month. In the first week of every month is when we get unemployment data, right? July 9th is in the second week of the month. So for the month of July, for the Fed meeting for July, the Fed actually will not have the unemployment data from tariffs, simply just because of the way that it's being collected, right? They collect data the first week, tariffs are announced the second week. The Fed meets then the last week of July, right? So there's just no way that the Fed will actually know the true effect that tariffs will have on the economy. So then that pushes, the rate cut to August, right? But the problem is the Fed does not meet in August. The Fed is closed in August. There's no meeting in August. So then the next time that the Fed meets is in the middle of September. Uh, by that point, we would have already gotten the horrendous August labor report. For a fact, the August labor report is going to be bad. Tariffs will cause companies to lay off employees. That is a fact. That is what's going to happen. The Fed is not going to save us in August. The Fed does not meet in August to cut rates. So then the next time for them to cut rates is going to be in September. Okay, middle of September is when they meet next. Uh, the problem is if we get poopy labor report in the beginning of August, guess what? The market is selling off all of August. You know, the Fed comes in the middle of September saying, "Oh yes, we see labor is bad. We need to cut rates." They cut rates, but the damage is already done. The labor market has already seen the massive spike. The stock market has already crashed. The Fed is late at that point. They can't do anything. At that point they're just trying to, it's like you have a massive hole in your boat and you're trying to with a little bucket trying to, dump the water. You're going down. The boat is sinking, right? It's an incredibly, it's a terrible thing to see how, it's worked out, and it's a terrible thing that the Fed won't preemptively cut rates. But, that's just the situation that we're in. So it's like we have to prepare for it. We have to prepare for it. That's that whole thing. I fully expect August to come around, first week of August to come around, and the whole market just poops because of the labor report. That's like a logical thing to say there. You can't just say, it's not like, July 9th, Trump is tariffing us, and then July 10th, we get interest rate cuts. Heck no. There's a way that the government works, a very systematic way that the government works, and then there's a very unsystematic president. So, you know, there's that. So the next point that I want to make is the location and the price that the S&P 500 is at. So right now we're trading at about $600. We were trading at $600, as far back as it looks like November. We were trading at the same level as far back as November 2024. That was right after the U.S. elections. The market sentiment was sky high at that point. People were very excited for a pro-business administration. They were looking forward to rate cuts, deregulation, all the goods. Since then, it's been a little bit of the opposite. We've been hit with tariffs. We've been hit with, a Fed that is, been very clear about when and if they're going to cut rates, what that looks like. And for the stock market to be trading at that same price as it was trading at without tariffs priced in, right? Because in November, nobody was pricing in tariffs. People were pricing in a lot of growth. Right now, we're at the same price, except we have tariffs on the horizon. We have tariffs coming in less than 1 month from today. And we've already previously seen that, with tariffs in April, when Trump originally gave us Liberation Day, the market fell to lows of 480, So that tells us that the market, with tariffs, the stock market is correctly priced at about $480. Without tariffs and without and with a pro business administration, the market sees 600 plus. Tariffs are on the horizon. I'll say it again. Tariffs are on the horizon. We should not be pricing in insane growth trading at $600 plus right now. We should be pricing in tariffs. We should be pricing in about $480, right? We got it wrong last time. Matter of fact, in November, truly, now looking back in hindsight, I actually kind of think that when Trump got elected in November, we all actually should have been selling stocks because one of his major campaign promises were tariffs, right? Um, he kind of remedied that situation by, putting on tariffs and then taking them back off. So it kind of gives market time to adjust. But what the heck? We're kind of doing the same mistake again, like we were in November, pricing in a bunch of growth and everything else, except tariffs are on the horizon. In less than 1 month from today, tariffs will affect the global trade. And the market has already shown tariffs are correctly priced in at lows of 480 in April. When Trump originally announced tariffs in April, the market fell to about $480. That's where we should be right now. And the next point I kind of want to dive into here is kind of the location and the price that the S&P 500 is at. Um, as we trade, slightly above 600. What the hell? And the next thing I kind of want to dive And the next point I kind of want to dive into is the location and the price that the S&P currently is at, relative to previous months on the monthly time frame here. This is completely detached from the price action. This is just kind of based on just pure logic and like, yeah, and I don't think, just kind of, yeah. And the next point I kind of want to make about the and the next point I kind of want to make about the June distribution thesis and kind of the price and the location that the market is at, and kind of how this is a little bit dangerous, kind of a dangerous level that we're at here, and why I truly believe that insiders will continue kind of selling, and why retail will continue buying this price level, which is what we've been seeing a lot recently here. So as we trade at above $600 here, um, we can go back in the market, and as far back as November 2024 was when we were pricing in $600 plus, and in November 2024, that's when the market was. I think Trump just got elected during that time, so the market was pricing in a very pro business administration. They were looking, for rate cuts and all this amazing things that would help out. And the next point I kind of want to dive into about the June distribution thesis, and kind of talk about the location and the price that the stock market is in, and kind of how it's a little bit dangerous, for us now. So at this point, we're trading at above $600. We were trading at above $600 as far back as November 2024. So thinking back to November 2024, that was when we just held elections. The market was gapping up, and it was pricing in a lot of growth. They were pricing in uh you know rate cuts, and just economic expansion, with this new pro business administration. That was, of course, the opposite of what we kind of got here. And now, with tariffs less than 1 month away, we're at that same zone of $600 plus, pricing in still a lot of growth, a lot of expansion, um, which is what we saw, which is what we were doing in November, right? No. So to kind of, and another point I kind of want to make about this June distribution thesis, and why the $600 zone is a little bit dangerous for the S&P 500 at this time, is it's not necessarily due to the price action, which of course matters, but the next thing that matters a lot is, the location that we're at, and what that kind of tells us about the market. So if we look at the market, we were trading at $600 plus, which is what we're trading at right now. We were trading at $600 plus, as far back as November 2024. At this point, and if thinking back to November 2024, Trump just got elected. The market was pricing in a lot of economic growth, They were pricing, rate cuts, all this amazing stuff. They were hoping that, economic expansion was definitely going to be on the horizon here. And I'm not saying that it won't be. I'm just saying that was the market sentiment at that time. Uh, Now we're kind of trading again at that same $600 zone as we were before. Except now at this point, the economic horizon has shifted, right? Um, at this point, we have you know tariffs less than 1 month away. Global, widespread tariffs less than 1 month away. That is not a economic growth factor. It's probably the opposite. So it's kind of a little bit confusing why the market would be trading at extreme growth zones, levels of extreme growth when there shouldn't be extreme growth. Of course, right now, as of present day, June 16th, yeah, it makes sense that that would happen because there's no tariffs like that. And like, it's not like we have widespread tariffs. I think there's just baseline 10% tariffs, kind of, nominal. But now, um, we've been promised tariffs on July 9th. Like, that's kind of like we already have the answer to the economic question, which is economic slowdown, right? We've already seen that in April, when Trump did Liberation Day 1.0, we were reaching lows of $480, right? That's what the market has correctly priced in as tariffs. Like, the S&P 500 is correctly priced in with tariffs at $480 in this lower level zone here. Only after Trump really, took a tariff pause is when we saw we saw some improvement in prices. So I truly think the market is mispriced here at $602 because we're not in an economic growth phase. There's no major economic growth on the horizon as we, had in November. That kind of hype that we had with a presidential election. It's died off. It's done. Uh, at this point, truly, reality will need to set in, and prices really should sell off. Unfortunately, um, that's kind of that's not even based on technicals or anything. That's kind of just based on logic a little bit. Why are we trading at the same levels as we were, with economic growth priced in as when we have tariffs, on the horizon there. And I kind of want to conclude this video with just like the overall message of, this whole video and kind of what I'm trying to portray or what I'm trying to And as I kind of wrap up this video here, I kind of want to talk about what my overall message here is, kind of what the key takeaways from this whole thing should be. It should be, don't be afraid to, sit on the sidelines, to, hold on to cash if you're uncertain about, making a trade. If you're not liking the trading conditions, like me personally, I don't like this grinding higher market that we're in. So am I going to make, a massive call on, Tesla or Nvidia or something like that as I was previously? No, I'm not. It doesn't make sense to. Uh, and another reason why it could be beneficial to sit on the sidelines is if you're waiting for a specific setup. Me personally, I'm kind of waiting for a specific setup. I'm waiting for, the hype to kind of reach a climax as it kind of is now a little bit as we near the August, which is kind of. And I kind of, and as I conclude the video, I want to kind of recap and to make sure that you guys as my audience capture the overall message that I wanted to present with the video, which is, a few of them, and I'll kind of go through them. Well, number one is I want you guys to be okay with not being in a trade. Don't feel like you have to be in a trade. Don't feel like you have to be, risking your money in the markets. Just because you trade stocks doesn't mean you have to be in a trade, right? The smartest investors, Warren Buffett, he's holding on to a lot of cash right now. That guy is incredibly smart. I bet if he wanted to, he could, find, a company to invest in. But instead, this guy is just, absorbing information as it comes. He's not going to make any rash decisions. He's not going to, chase gains no matter what. He's going to, play it safe, play it slow a little bit, and only bet his money when he's confident. That's what you guys should do. Even me, as you guys know, I'm not risk averse. I'm definitely not a Warren Buffett. I'm not a value investor. I'm a swing trader. I make some pretty aggressive call outs. Even me, I'm not making any, massive call outs, for June. in my June outlook, I didn't say watch this stock to all time high. None of that. I was, very mellow. I was calling for distribution. I was telling, I was hoping that the rest of the FinTech community would also kind of catch the vibe that the market is, in a transition time. It's in a very, contentious point where we're in between, tariffs and not tariffs. We're in the transition between, going from, an untariffed economy to a tariffed economy, right? I was hoping that the fintech community could understand that and kind of join me in that whole distribution thesis. Instead, we're kind of getting people, going out there every day posting about how markets only going up, making these incredibly bold and baseless call outs about it, and they're getting views, and it's like it hurts my heart because it's like these people are only saying these things because it's the popular thing to say. They're saying these things because they want to get views, and they want to be, the loudest guy on the app. It doesn't matter if they're right or wrong. It doesn't matter if they're the people watching them will lose money or not. Even though none of this is financial advice, it just hurts my heart to see. Um, and another thing about, sitting and kind of waiting on the sideline is it's okay if you're sitting on the sideline if you're waiting for a specific setup. Like for me, I'm kind of waiting for, this whole S&P 500 to kind of start, rolling over a little bit here as we kind of, you know, especially in August, once that labor report comes out, I fully expect the market to take a massive poopy doopy, right? So I'm kind of holding on to my cash so I can perfectly time the market for that event. And that's a completely normal thing for traders to do. It's a wise thing for traders to do. And I hope that maybe some of you guys can consider that in your trading style, not always being in a trade, not always risking money, and kind of only taking A plus trades. Um, the next takeaway for this video would be to kind of like make sure that you're looking around at the economic landscape. Make sure that you're checking higher time frames. Make sure that your investments are grounded in real fundamentals. Don't ground your investments, in the hope that somebody else would just buy those shares at a higher price than you. And it's kind of like this. Um, this rat race of, hot potato of, passing the stock around, who's going to buy it higher, who's going to buy higher, than who's call holding the bag, right? Don't do that. I really hope that you guys make sure that your investments, actually make sense. They're based on true fundamentals of the company. I also hope that you guys are making sure that your swing trades or whatever trades that you guys are taking are in agreement with the current trend that the market is in. Um, Making sure that you're understanding and you're looking at the economic landscape and trying to analyze what that would do to the S&P 500. And that's a very important thing as well. That's all for today, guys. Please leave a comment. Let me know what you guys think about this. Let me know if I, change your mind, or, you're going to weigh this against your own bullish thesis. Again, I'm not out here to tell you the market's going to go up or down. I don't care what direction the market goes. I'm just here to make money. I'm here to give unbiased advice. I'm here to contribute to the FinTwit community. So if any type of interaction with the viewers, I would love it. If you guys comment, I'll respond to you guys, whatever else, anything. Anyways, thank you guys so much for listening, watching, anything else. You guys have a great day. Stay safe, stay profitable, take profits. Catch you guys in the next one.